Hi everyone, how are my trading warrior brothers and sisters doing this morning? Where do I start? There's so many things to acknowledge and validate today, and Blake will be with us in the next couple minutes. How's everyone doing? Hello Walter, Zia, Tolson, how are you? Nice to see your handle in here. So we'll start off acknowledging and validating a great live call made by Mr. Steve Volge up here in USD CAD on Friday. A lot of this had to do with some divergences. He saw also Nick's harmonic pattern for the low in crude near the button on Friday. So we've had a recovery. In my humble opinion, I think this is going to be a failing rally between 720 and 740 with risk above the high of the move for another wave to the downside, maybe 35, something like that. As the crude does not go directly to new lows, it's just a pullback, but there's another pop left in it. So that was a great call. And then to boot, Mr. Steve Volge prepped everyone Friday saying on a Macron win to sell a gap higher opening, which is what we had in the euro, which also lined up with confluence of FA. Okay, here's the analysis by Blake and Steve. 110 came in at the 1.27 level. Okay, we know Grega was looking for it too. Right? There you go. We know Nick was looking for it too. There you go. So we had lots of ForexAnalytix confluence on the euro to sell the pop on a Mac, buy the rumor, sell the fact on that. So congratulations. And if that wasn't enough, something that you should pay attention to every Sunday night is Blake and sometimes Steve does a look at the week ahead on our blog, a video, next week preview by Blake. With Blake this week, and Blake talked about the euro at that level, and to boot, talked about the potential of a false breakout in euro yen, which is exactly what happened over 124. So everyone that has taken ForexAnalytix research to heart, either here in the room or on the blog, or if you're a subscriber, should have been able to catch this euro decline for a nice, at least, scalp. And then Blake threw this in, looking for a gap higher opening on the Macron win. 24 could turn out to be a false breakout. It manifested in spades. So, should already be having a good week as the week begins, in my humble opinion. Hi, Ziggy. I saw your entry for the contest. You've become a favorite. You're stooping pretty low using a cute baby to win the contest. That's all I could say. And I know that Blake wants to jump in here. Blake went a week without talking in a room, so he's jonesing a little bit. So Blake, if you can hear me, take it away, bro. Great to have you back.
Can you hear me?
Yes, you're a little low, Blake. Great to have you back.
Okay, nice to be back. Yeah, I'm. I don't know if I would say jonesing. I don't know if I'm jonesing for much at 6 o'clock in the morning, but my coffee. So.
All right.
But no, it's nice to be back. You know
what decade I grew up in, buddy.
Yeah. Right.
Yeah.
So I mean, first things first. I got crushed last week. just so you all know, I was trading gold to the long side, and I got pretty aggressive trading gold to the long side, trying to pick it up on the cheap, and it really, it took me for a ride. It took me for a ride last week while I was out of town, and so I'm busy right at this point in time playing a little catch up. Fortunately, I made some great trades overnight. I shorted the euro yen at I was short coming into the election, into the weekend, and then I actually shorted more right at the highs. I mean, it was pre-market. It was like at 124.30 something, probably even before most people could trade. I was going ahead and shorting some euro yen. I shorted some euro dollar above 110. I closed that out this morning at 41. So I've been trading pretty well. And speaking of the dollar Canadian, I actually shorted some dollar Canadian just a little while ago at the 50% retracement. So doing good with what I'm doing here. I just I'm playing, like I said, I'm playing a little catch up from last week. It's just, I was out of town. I shouldn't have been in positions as it was, but I just kept some open stuff, and I tried to play gold, and I was doing it somewhat blind, which never is the smartest thing out there, as far as I'm concerned. But overall, I think the market really priced in this win by obviously by Macron and or Macron, or however you pronounce his name. I'm sure I'll have a lot of people giving me a hard time about my pronunciation there. But let me show you a couple of things that I think are pertinent to today. Okay, and let me grab
Blake, I'd like to interject great transparency on admitting what happened with gold, and that's why people respect you. You're not a revisionist. Words people choke on Twitter, Blake, are I don't know and I was wrong. And everyone's wrong sometimes, and a lot of people don't even mention it when they are. So, everyone knows you're an excellent trader, and that should just, reinforce to people that, if they're having a difficult period, it's not the end of their career. In fact, Blake, I knew a guy, his name was Dittmer. He owned a clearing firm at the Merc called RB&H. I don't know if you remember it.
No, I don't.
He knew, he said he could tell who the great traders were once they were in deficit, how they came back. And that was a hallmark of a great trader, because some people during drawdowns, then they start to break all their rules, they start doubling up, they start doing all these things. And really, you can tell if someone's a good trader if they know how to manage and come back from a drawdown.
Yeah, and that is I 100% agree with that. Being able to recover and keeping your head on straight is so important in the markets, and a lot of people do. They get underwater, and then they start taking on unnecessary risk, and that usually is what will do them in. And I 100% agree with that sentiment. I mean, I've been watching traders for so long, and I can tell who the good ones are, the ones that can pull out of a losing situation or a deficit, or been under some pressure, and they can come back and really brush everything off. That is really the hallmark of somebody who knows what the hell they're doing in the markets. And
more than that,
be wrong.
More than that, Blake, it's your character, and that's why people trust you. Because you're not a revisionist, or, oh, you know what, that didn't happen, I got out of the way before it declined. Yeah. And character and ethics are unusual in this industry, and I'm grateful that you display it.
Well, thank you. Well, they shouldn't be, and the reason why I say that is the reason why they shouldn't be is because if you can't make that type of admission when you're trading, yeah, how are you going to perform when you are under pressure? You know, I mean, look, I face the music. It's like, man, I take a loss. You know, like I was trading gold, and I was trading to trade it, you know, as we were approaching this, like this 50 level. Okay, here, let me actually show you, like right here.
Mm-hmm.
We were approaching this 50 level, and I'm like, I got pretty aggressively long down here because I knew there was a lot of support, trendline support came through here, and you know, my stops were below 41 right here. And I sat through this, and I got hit, and then I got out. And you know, if I couldn't sit there and go, okay, I made a bad mistake, or you know, it wasn't even really a mistake, it was a planned trade. I mean, it just didn't work out. You know, if I can't sit there and go, okay, well, you know, I had a bad trade, now time to get busy and, you know, get started again. It's impossible. You can't survive. You'll never survive. You'll never survive in this market because you're going to take losses. I plan trades all the time, and if I can be right, like I tend to be right more than I'm wrong, but I know that I'm going to be wrong, and you know, sometimes I step on the gas a little bit, like I did this last week on gold, and I should have been watching more of the correlations. And actually, there's a few things that I could take note that I should have done better. One of them is actually been in front of the computer more attentively, but regardless, you know, I took a loss, and it's like, okay, well, you know, I got out, I shook it off, and it's time to get back to business. I mean, it's, you know, no, you know, the market's not going to wait for me to, you know, to get better, and it's not going to wait for me to get my head back on straight. So,
and you know what, Blake, that's discipline too, because I will admit it. Okay, I have, do you know what a CIC order is? Cancel if close. That's where you pull your stop because you don't want to take, you don't want to realize the loss. So you cancel if close and you pull it and you go, oh, you know what, I'm going to use a mental stop, right? Or, you know, maybe I'll scale in some more. I still believe in the trade. And that's where the huge, real difficult drawdowns happen. At times, that's how people blow their accounts, because I've done it. So please don't use cancel if close orders on your stops.
No, you know, and actually, if I'm in front, my stop orders are usually, you know, they're pretty far away from the market. Typically, they're there for account preservation purposes. But for me, if price is close to my stop, I will move my stop so I can, if I can be there to manage the trade. So I will cancel if it's close, and I'll manage. But I'm also good enough to just get out. And that was actually a case right here. It's like my stops were actually a little higher, like right here. It would have saved me a few bucks, but as we were approaching this trend line and we back tested this trend line, once we back tested this trend line right here, this is where I got out. You know, we back tested and we couldn't break back above it, and I got out. It's like 1241, and I realized at that point that, okay, I'm wrong, and I'm man enough to get out of my trade and take the hit. I don't have a problem with that. A lot of people do, and that's, yeah, and if you do, I mean, hey, you admit it, that's good. Then just keep your stops in place. Me, not so much. All right, so let's you know, getting away from how I handle gold and stuff like this. Yeah, let's talk about what's happening at the moment. So I shorted some euro yen, and I've got a really nice cost average now on this euro yen. I was expecting a rally to the above 124 on a Macron win, and we got it. And I sold pre-market like at 124.37. I added to what I already had, so my cost average is really good. My cost average is basically near 124 at this point. And I'm going to try to stay short. There's a couple things that are happening right now that are very important to this trade to see if this trade's going to work or not. As far as the euro yen goes, first of all, this is a little head and shoulder pattern hourly. You know, it actually points to like 122.50. is a realistic expectation, but I actually want to try to hold on to this a little longer, depending on what happens here. So if you, what I say that is, you take a look at the S&P. The S&P, same situation. We gapped up at all-time highs, and then we've sold off. So now, if the S&P can reverse, and by the end of the day we end up weaker, then this sets up for a big double top in the S&P. That you can see that the here. Let's go to the S&P and let me compare this to the Euro Yen. You'll notice that this is very similar setup here. You see the similarities. So we have, you know, the potential of a false breakout here in the Euro Yen. We have a double top in the S&P, and if the S&P does pull back, and you know, we close lower today, and like let's say we sell off tomorrow, then I'm going to try to hold the Euro Yen for a while. My only fear at this point is with the euro. I don't know if the euro's done going higher yet. You know, that's the risk. And if you look at bonds still look like crap. I mean, they really do. If you know, I'll pull up the here's a 10-year. This one's going to be delayed, but you can kind of get, it's delayed by a few minutes, but you can get the general sense of this. You know, bonds are still pretty weak here, and I was expecting more of a move higher, and we really don't have it just yet. So I'd like to see the bond market actually start to show some strength, and that's just not the case. It's just it's not doing it. So if the bond market starts to show some strength, that's going to help these yen pairs lower, and that might also reflect you know, the stock market too, if the stock market sells off. But gold's weak, silver's still weak, precious metals are weak in general. You got bonds that are still look like crap. So, you know, if you're short the yen pairs or you're short risk, it's not a sure trade at this point in time. It's not a home run by any stretch of the means. You know, I really want to see how equities perform today, but I'm not sitting there looking at it like, oh, you know, we're going to for sure get a failure in the S&P and we're going to get a reversal of these yen pairs. I'm not really that comfortable yet. You know, even though profitable, I'm still just looking around going, okay, we're definitely not out of the woods at this point in time. But that's what I'm paying attention with, like the euro yen. The dollar yen as well. If you guys haven't seen it, the dollar yen is at channel resistance here at 113. So as long as the dollar yen stays below 113 on a closing basis, actually I don't really want to see it go above 113 intraday. But as long as we stay below this 113 level, if we should get back below 112, I'll feel a lot more comfortable about being short the euro yen. I have some dollar yen exposure too. I'll be more comfortable holding on to those pairs if we could break back below 112, because that will open up a move back to 110, 111. So a lot of things really have to take place today for me to be comfortable in what I'm doing with these yen pairs and with risk. I am short the S&P right now. I shorted some right at the open, like literally when the S&P pits open yesterday at 6 p.m. Eastern. I laid into some S&Ps. I closed half of it in Europe about 3-4 hours ago, and then about 3 hours ago, actually. Here, where's the S&P futures? Or here's the S&P, the ETN. But I shorted some right at the open here at like 24.03 or something, somewhere around here. I closed some of it down here a few hours ago. We're just kind of bouncing around, but I think the S&P, if we can start, hitting new lows on the day, that's going to do a lot for the potential of a bigger, longer-term reversal. When I say longer term, I should probably clarify. When I say longer term, I'm talking, maybe over the course of the next couple of weeks. I'm not talking about some big reversal. However, we are in May, and sell in May, go away is really a big seasonal trade that I pay attention to every year, and it's more how I position myself with risk. And usually the first, we're going in the second week of May, but usually sometime between now and the next week or two, stocks usually become a little pressured, and you can go look at it historically. And here, I'll just really quick, we're in May right here. You go to, here's May 2016. Right here, you can see the market sold off a bit. We saw some selling. Now, obviously, we rallied right into the summer. But here is, May 2015. You can see we sold off a little bit and then really sold off going into the fall. But usually, you see this little hiccup around this time of the year. So, hopefully, equities will play out with that seasonality type of trade, and maybe we get a couple of weeks of selling in the S&P, which will obviously weigh on the yen pairs lower, and that's what I'm playing into at the moment, and playing into that theme. But I might be a week early too. That's and I'm not ignorant to the fact that I might be a week early in this trade. So.
Nice looks.
Yes.
Also on this high in the S&P, Blake, it was unlike on the daily S&P in April. It was a confirmed high, and if you look at the RSI now compared to April,
oh God, yeah, it's
pretty glaring, huh?
Yeah, it is. It's glaring, but that doesn't mean it can't go higher. But yeah, it definitely. I'm sorry. I got up at like 2 o'clock this morning, so I'm yawning already. It's so sad. It's 6 o'clock in the morning and I'm yawning and I want to crawl back into bed. But you're right. The RSI is very divergent, which will add fuel to the fire if we do come under some pressure. So I'm really interested to see how the stock market reacts today, for sure.
Great to have you back, buddy.
Well, it's nice to be back.
I called the FA research team the dream team, and it wasn't my idea. It came out of the community. That's how it came up with that.
That's great. I appreciate that. Well, we have a really awesome team. I wasn't super up to speed on what everybody was doing this last week, but I'm obviously getting back in the saddle today. So and I look forward to seeing what everybody's doing here. Steve and Nick and Grega and Stelios, they all stepped up in a big way last week. Cool. Hold on. I just provide some great actionable ideas. Hold on really fast. I'm sorry. I just covered my dollar CAD. Okay. Yeah, I just covered my dollar CAD here. So just played it a little to the short side when we hit that 50% retracement. 50% retracement here. Whoops, here on the hourly. Yeah. Right there. I just covered it. Covered it obviously a little too early, but yeah, I'm out. So nice job. Yeah. I was, just trying to make a few bucks, little few ducats here and there. Anyway, Dale, well, cool. I'm gonna pass it over to you. Are there any questions that we have for me, really quick? We got a thank you from Walter. Any questions for Blake? Base members? No. Okay, sounds good. I want to just make sure that. Tom asked, why did you hit the 38% retracement or the 618? It was basically because I got in at 12. I watched the reversal. I waited for it to reverse. I saw it hit the 50% and then show the reversal rather than anticipating the reversal. So, yeah. So that's it. Catherine wanted to see the Aussie New Zealand. I do not have any Aussie New Zealand exposure long. I actually got out of my Aussie New Zealand, and this I actually took a little bit of a. When the inflation data came out of of New Zealand. I think it was Thursday night. I want to say it was Thursday night. Let's go over here. I put my stop in really close. Like I was long, and I put my stop in right below here. I got stopped out, and which is a shame because I've been playing a core position, and I just got stopped out of my whole core position for basically a break even. And I'm not long, and I'm looking at this thing, and I don't really know what to do with it. I know some banks are calling for a move back down to 103. Frankly, I would be happy to get a move back down here. Like if we could get a move back down towards like this area here, like around this 104, 105 area. You know, that would be fantastic. If I can get a move down to here over the course of the next week or two, I'll play it on the long side down there. I just don't. I don't have any exposure at the moment. And there you go. And actually, Catherine had asked about that. Kevin asked about that too. And Luca asked if I wake up every morning saying "die Kiwi, die." And the answer to that question is yes, I do. Even though I don't have any Kiwi exposure right now, I still should go to hell in a basket. All right, cool, man.
I think Stelios took up that war cry for you, buddy.
He might be. All right. Well, Dale, I'm going to pass it over to you. Thanks everybody for being here. I can't wait to hear what some of you guys are looking at in the community. And thanks for being part of it, and thanks for listening in every day and keeping Dale and everybody else company. So
yeah, and on our toes.
Yeah,
Thank
and
you,
on.
Blake.
All right. Thanks, Dale. Thanks, everyone.
Thank you, buddy. I want to turn it over to you, Mr. Volge. You know, I can't play the Face Award. I don't know why. There's something missing there. But you deserve the Face Award. I just want to, this came from a community member that still might be setting up. You know, we were talking about this, the pound Aussie on the 4-hour time frame. Looks like we have a 3 here. So that's on my watch list here. Still a lot of Mo. Steve calls it the beast. It's definitely the beast. But you have to respect that we do have something like this setting up here.
Yeah, it's very likely. You remember that we had a look at it on Friday as well. I actually still have it on here. If you want to give me the screen, we can have a look at a couple of things. First of all, the pound Aussie, yes, is definitely stretched a lot at the moment, and I see a case of potential 5-wave up as well.
Okay. All right, Steve. Let me give it to you.
No, okay. I grabbed it. It's okay.
Oh, you got it? Okay.
Yep. Just verify that you can see.
So you know, if you probe it, pound Aussie, because there's so much, you know, money in an average trading range, maybe you go with half of what your normal position is if you try that. Give me a while to understand that. Use less leverage.
You see the zones here. We're looking for a strong formation of a strong candle formation to give us the go-ahead. But I need to reiterate here, in my opinion, the trend has clearly changed. After having a slowing momentum, we obviously broke out, and we've obviously registered for the first time a higher high. So if you want to trade it to the short side, sure thing. Wait for a signal and then do it. But respect the support zones, because I have little doubt that this thing is going to resume going higher after a correction lower, okay? So one zone we can check is this one, the other one is this one down here at 167.28.
And this idea for something counter trend, Steve, came from Face member Armin Shaya, and I've watched Armin trade for about, I don't know, 3.5 years. It's a very good technician.
Nice.
So,
by the way, since we were looking at Euro,
great call when you left us Friday, Steve, saying, I'm quoting you, I'm looking to sell a gap higher opening on the Macron victory.
Yeah, and take a look at the drawing we had done in Euro Yen, as you see 3 days ago. I mean, that was drawn on Wednesday.
Yeah.
I was expecting a wave 5 that would reach 123.65 on average. I mean, because this is just an equality target from wave one. You know, it's a rule of thumb. It's not a, you know, you can go less, you can go more than that. And as usually, what's best than wiping out the stop losses first, right? By gapping above the previous high and then reversing. Personally, I find it very, very hard that this move that started here and then it ended up here. Actually, there are two things I find very hard. One, that this is not a resumption of the trend higher that started here. So I think that this move is impulsive and this is the right way to be. But B, I find it very hard that the whole correction to this wild move higher is just going to be a single bearish engulfing candle like the one we get today. I think that even if the trend proves to be extremely strong as it started, we should still get at least a pullback to 122.50. I mean, there are no...
What's that, 23% back? 23.
Let's pull it here and I'll tell you.
Yeah. In between.
Yeah, I'm looking at it because it's the previous high up here,
Yeah.
and then we have another interesting zone, which is this one, 121.50, 60, 70. You can see it if you look at it at a shorter time scale, like 1 hour or 4 hour chart. You'll see that we found resistance there plenty of times, and it's also the broken trend line that capped the correction lower. So I'm looking for a move somewhat lower from here. I mean, I think it's too soon to buy after this few hours of move lower.
We're getting a question from Jason on EuroCAD. I know you're focused on all the Euro crosses. So
yeah, sure.
interested in
EuroCAD, listen, EuroCAD has turned back to test an important zone, but I will have to say here as well, I think this is too short of a correction. On the other hand, we could see one more move higher. So I'm not so, I don't think this is such a clean setup as we have in Euro yen. I mean, somebody can say that this is actually a 5-wave move. I'm not so sure. I think we are currently at support again. So if you want to buy it here, I totally understand. It makes sense from a risk-reward perspective. With a stop loss, I don't know, somewhere here, roughly, below this trend line and below the zone. But I don't like it yet. I mean, I don't see it as a clean short as much as we saw the Euro yen. I'm of course repeating that those are counter trend moves, so you should be careful. Euro Aussie as well. This is a very strong candle today, but it hasn't definitively turned. But I expect that most probably Euro Kiwi, on the other hand, as you see, is showing more clear signs of a reversal lower. We didn't make a new high as we did with Euro Aussie.
Might have one more drive.
Yeah, perhaps. We are on support.
We are
on support zone again, though. But so if we penetrate below here, I expect.
Blake told me to pretend to be an expert.
You are.
He told me to pretend.
You don't need to pretend.
I'm kidding.
I think a move down here is quite likely to test the previous high here. It's quite likely. So now, having to do with USD CAD, since you mentioned it before, I have the same opinion as I told you with Euro yen for USD CAD. I mean, I don't think that the move lower, first of all, huge bearish engulfing candlesticks like the one we saw on Friday, which in essence engulfed 1, 2, 3, 4 of the previous days, very often pop up and then the market forgets about them and resumes like nothing happened. The reason is very simple. How many people do you think that today sold on a retracement up here? They were like, okay, perfect, this thing snapped. I'm going to look for a pullback to short. Plenty, actually. I think that the minimum target we can reach here is, because the market has memory, is the very important 136 level. So I very much doubt that we can see this being a half-a-day move. Everything is possible with the market, but experience tells me that we should have at least one leg lower, at least. So I think that 136, 135, 80, 136 is a very achievable target, very easy to get there even today, tomorrow, or whatever.
I like your blue dotted line for a target.
Yeah,
which
sure.
which would imply
that one could work as
that
well.
crude is pulling back after the big reversal and early strength last night, but that may just be A, and we might be in B in crude, and then we still, I think, have more left to the upside.
Very likely to retest, for example, to retest the broken trend line, which now, because it's decently steep, we can now find this trend line confluencing with this zone
49.
at around at around 48.70. So yes, a move up there during the week is actually quite likely to to get the market more balanced in positioning and sentiment again before we get, let's say, another move lower to perhaps this zone. The 42.5 zone roughly. So yeah, that's quite a likely scenario. Pop, move up, move down. And for people that I think I mentioned that before, and you indirectly mentioned it a while ago, Dale. It is, in my opinion, it's very important to monitor plenty of markets, because you very often get some extremely strong signals. On Friday, at some point, we were trading, I think, 1.7, 1.8% lower in oil. Yeah. And then we snapped back in very little time, and we were flat, and we were looking of going higher, which we ended up closing like 1% higher or so. At that point, the FX market and the FX correlated pairs with oil had not moved yet. The first pair that actually started moving was USD NOK. So USD NOK started moving, showing a clear reversal itself. But still, if you remember, USD CAD was mostly flat on the day. Yeah. So, for example, people that missed the oil move, which makes sense because it needed cojones to be long oil at the lows of the day. And then noticed that USD NOK was reversing. Still had an extra opportunity for USD CAD, which was delayed by quite a lot. So, for example, if you know that some markets are correlated with each other, and you see that some of them start moving and the other ones have not shown any movement yet, it's like the canary in the mine. I mean, you got the canary telling you something, and then one by one, the other markets start noticing. So sometimes, I know it sounds weird because we live in an era that we have a lot of algos, etc., etc., etc. So you expect that some moves are going to be instant, but as you see, you still get opportunities. And USD CAD was an opportunity. USD NOK was the first one, and USD CAD was the second one. Somebody asked
that was the canary in the coal mine.
The oil one.
Which, I think, I don't know if miners still use it or not, but, because of the Humane Society, the canary would start to chirp and sing. And I had a pet canary as well, when the oxygen would start to get low.
I think almost all over the world they're using sensors for that nowadays.
Good. Because it makes me cry thinking a cute little canary in the coal mine would have to breathe that dust.
Yeah.
Well, you know what I mean,
but
man?
Back then, now they have sensors and everything else that monitor everything from seismic activity to to oxygen percentages, etc., etc., etc. Oh, of course, there's still plenty of countries in the world that miners have to go through conditions that are much worse than they should, but that's a different conversation. Yeah. Now, somebody asked about silver. Silver looks very, very bad still. I I'm still long. I'm looking to be more long. I'm still long from 1640 something. I'm looking to be more long down here. This is definitely a counter trend move, which I'm totally comfortable with that because I'm using no leverage. I want to build a position for myself. But I have absolutely no reason to tell you that you should be long or whatever else. We seem to have stalled, but the more that we stall, I mean, we're holding for 3 consecutive days up until now, the third one. We're holding this 1620 level, but the more we fail to rebound, the more it tells me that silver wants to make another move lower. Now you'll ask me if that's my opinion, why do I still keep my initial position? I can bail out with a minimum cost because I don't mind. This is a longer term position for me. But if you're looking at it like a short term position and you're long, it doesn't look good at the moment. It looks like it wants to go here.
Well, you know what, Steve? A pretty good technician that never talks about silver. You watch CNBC once in a while, don't you?
Very rarely, actually.
Very rarely. Well, his name's Carter Worth. They call him the chart master. And he was talking about the amount of down days in silver was something like, 14 days or so?
Yeah, it was 14 days. It was a record.
Yeah, and he was, looking at catching the falling knife down here for at least a pop. So, he's pretty good. It's good company. The guy's really smart.
I strongly believe that we're going to get a pop. And I have no problem coming down here, and then I'll have an average position at around 16, and then I'll be looking of at least a rebound here to 1675 if we go all the way here. Because let's say miraculously we turn around now and it seems that this little effort to build a base does succeed. Personally, I give it a 20% chance at the moment. Then I'm looking for a rebound high.
His name is Carter Worth. Carter Worth. He's not on Twitter. He's on CNBC.
Okay, nice to know.
I'm sorry, Steve. Go ahead.
No problem at all. So if we manage to build a base here, we might go all the way to 1720. If we get down here, then I'm looking for 1680. But I will still be looking to make 80 cents, which is absolutely fine. I'm even willing to stay for a retest of this channel, which when it happens, it's going to be at 1550. That's fine. That's going to be my third bullet, actually. And then I'll have a position with an average of 1580, 1590. Then I'm going to be looking of a rebound definitely above 60. We'll see back then. I mean, I can't predict how the price action is going to evolve, but I can tell you as a fact that I've started building my longs and I have no problem being more long lower. That's from a personal perspective. But if that's not your trading style, don't follow, please. I mean, I'm just telling you what I'm doing. Everybody has their own trading style and they should be trading, what they know that works for them. But that's my point of view. Also an excellent trade was DAX. Actually, I'm trading the CFD up here. We followed on Friday because the CFD closes later. So we followed the US move, and a short up there was an excellent move. I didn't take it because I've already been burned twice here. Once that I left here on the short with a minimum cost because I shorted quite early, and then on the gap up I left it with, I don't remember, it was like very, very minor. It was just above my break even because I didn't like the gap up at all. I mean, this price action that we tested the previous channel, and then it was, I gave it another shot here at the retest of this trend line, but I had to live with at 12,600, which perhaps I shouldn't, but being burnt twice here, I mean, not taking my profits here and getting a loss here and having penetrated this ascending trend line, this looks like a parabolic move. Obviously, this is very often when you when you give up and you say that, okay, this is now becoming, crazy, that you see the reversal, and today's candle is actually pointing to something like that.
You showed this with a wave count last week before it got up here. I'm wondering if you show, and you had a wave 5 that was higher, I remember. Maybe we're there now. But the other point is the DAX is stronger than the S&P.
Oh, yes. Oh yes, it's
All of
obvious
Europe
we
is.
have plenty of flows leaving the US stocks and going to. And now that you mention it about stocks, there was something I was looking at and I wanted to show. You remember the conversation we had about
Yeah,
the
there it
Nasdaq?
is. But
Yes.
there's the 5 that you had up there. Oh, that was on
Yes.
NASDAQ. I see.
Yeah, that was on
Okay.
Nasdaq, yes. So
Okay.
the range has even extended a little bit between the 200 and the 50 DMA, and this now satisfies a fifth wave up. That doesn't mean that the fifth wave is done, because we had first wave, second wave, third wave, fourth wave, fifth wave. We've already registered the fresh high, so I think that we're very, very, very close to what we were looking here. I mean, ideally, I would like to see 5,685 for an ideal target, but I'm monitoring because today's price action, being a Monday as well, you know, says a lot. I'm monitoring, but I like this. I've been looking at it for a long time. It's extremely, extremely overbought in any kind of metric you look at it. I mean, if you see at the weekly chart of NASDAQ, just to have it there.
I think our guest is going to have a downside target for the VIX that he's going to talk about today. So, you know, that may tell you too. So,
Yeah, NASDAQ
yeah.
is currently above 70, of course. It's like 78 or something. I really like this. It's parabolic. I mean, after so many years of an uptrend, we actually accelerated the rate of which we gain. From the elections low, we're currently
What a long.
24% higher we were at the highs. 24% higher from November. I mean, this is insane. This is an insane move. This is a maniac move, honestly. Any way you look at it. But the good thing is that it's very clean from an Elliott wave perspective as well. I think we're very, very close, very, very close to some sort of top. I don't mean that it's the top, you know what I mean, but at least a decent correction, should be very, very close. I don't see the trigger yet, so I'm waiting, but I'm very, very, very close of following through this trade. Very close. I'll let you know.
Thank you, Steve.
Any other market you want us to have a look at before you
Any
give
other
your
questions for Steve? The Nikkei.
Oh, Nikkei, yes. Let's have a look at the CFD here as well. Another market that can easily get people trapped here. You remember we had a test of this trend line. I said that the more times we tested, the higher the likelihood of it penetrating higher, but people had no risk reward to be long. So I did believe that this time there is a good chance that we're going to break above it, but that didn't mean that there is a trade here because you had nowhere to put your stop loss that would make sense. And I had explained that by saying that, in my opinion, the next target is here. Here, you can see it, up here. But if you wanted to be long at the test here, you would have to have your stop loss down here. And the risk reward definitely didn't meet the minimum criteria. I find it very likely. I also see an almost complete move here that we're going to test somewhere here, this level, and then pull back. That pullback might give us an opportunity to join the trend again, because at the moment the short-term trend is very, very, should I say, tired. I mean, you wouldn't want to go long now. You wouldn't want to go long here or here, because where would your stop loss be? I mean, it doesn't meet my basic criteria, and I think it shouldn't meet anybody's criteria. So, you like this market? You like it for a reversal? A test up here would be nice. Even a reversal from here that a lot of stop losses have been taken out will look nice. We need to see, though, at least one more daily candle to say, oh yeah, this is a reversal. If we get a reversal, buying somewhere here, but you know, you still need to see the price action evolve. So ask me again after 1 or 2 days. I'll try to remember as well. I'm monitoring it every day, so I'm gonna let you know if I see something actionable. I don't see something actionable yet because there is no risk reward, as I said. That's it about Nikkei. Somebody asked about the monthly chart of Nikkei. Let's see. Okay, I don't see much different. This is obviously an extremely bullish month for the time being. It's a Marubozu opening wide. Okay, this is a pennant. Yeah, actually it's the opposite, but anyhow it's a flag of some kind. I see the potential of higher prices in Nikkei. I mean, I believe that stocks are overblown everywhere, but I believe that the chances are that we're going to move higher before going lower, before actually reversing, because usually this kind of bullishness will end in a mania phase, as Greg explained. You said 90.89 highs, 90.89 highs.
Wow. Yeah, that was, yeah.
Yeah, the top at 38.
It was like
yeah,
a 20-year bull, 20-year bear market. Yeah.
Yes, it was. It was. And to be honest,
like gold was.
Yes, and to be honest, we've broken this bear market after getting over this level, right? We don't have any more lower lows, right? We had a bottoming formation with this triangle here, and then we had a very, very clean uptrend, very, very impulsive uptrend. Then we had a decent retracement, and it's very likely that we're going to new highs. So, you know, if you ask me, I'm mostly bullish at the moment. Doesn't mean that I like the valuations, but I'm mostly bullish, I mean, from a technical perspective. But that doesn't mean that I see a trade here, not yet. I mean, I don't see the risk reward to get a trade here. A pullback, sure, would get me interested here. I mean, for example, this breakout was an amazing trade, this breakout. This clean trend line. If you bought it then, great, awesome. And it worked. Even if you held to it, we didn't even retrace back to that. So this market looks and remains quite bullish, actually. But, you know, we've been from the 18th of April, we've already traveled 1.5K handles higher. I mean, don't be long up here if you don't have a position. Makes no sense. USD yen, somebody asked.
We have about 8 minutes until Anthony.
Yeah, just a fast look. USD yen, in my book, has already broken out, but somebody can redraw the line a little bit. So if we draw this one not to pass from the wick and this one to pass from the wick, you might show that we're still holding barely the channel. Personally, I'm bullish USD yen. Does it mean that you should buy exactly here? No. A retest of 111.60 perhaps, but I need to see price action evolve. I mean, if you weren't long from here, that we had a very nice confluence, being long here makes no much of a sense. If we retrace somewhat, yes, sure. So it depends on if you have a position already or not. But generally, I like USD yen. We've discussed it plenty of times last week with Dale as well. In general, I like it. I like it to see it higher. I mean, I think it's going to go higher, but doesn't mean that's going to go directly from here. Okay, that's it, Dale. So who do we have today as an honorable guest?
A very great technician. His name is Anthony Allen. His Twitter handle is at 3X Traders. He does a lot with broadening formations, and I've seen him time some turns very well. So.
Perfect. Looking forward to it.
Stick around for Anthony. He's going to be with us in about 6 minutes. I see Anthony here in the house, so just want to get a little quick break in, and Anthony will be next if you could just...
Okay, thank you, Dale. Looking forward to it.
Thank you so much, Steve. Thank you, Blake. Thank you, ForexAnalytix. Thank you, community. Let me just...
I gave you back the screen, by the way.
Okay, thank you, buddy. I just want to, Ronit, I think, had a silver look for you to share. So let me just see what he came up with before my break. I think this is it. So here you go. There's an interesting picture of the silver, Steve. So it's still holding this uptrend line. I don't know, the midpoint is pretty important. So this looks like a monthly. Yeah. So the monthly's right here on major support. That's from Ronit. Thank you, Ronit.
Just a comment on this. It might work, definitely. I mean, it's a good line to monitor. Personally, I don't like it yet because I'm usually looking at 3 points for a trend line to be tested, before I start. I mean,
Right.
I draw trend lines when they seem like they might become significant from 2 points, obviously. But, to matter, I really need to see a real rebound from it. Then, next time we visit it, I'm going to be like, okay, this is an important trend line. Then I'm going to give it more value.
Okay, buddy. So just, just evidence that we have some professional traders here in our community. It's not a hobby. They spend a lot of time analyzing the market. FACE is where pros come to trade. So hold on a second, and I think I'm going to just show this and take a quick break. And I'm really looking forward to talking with Anthony. It's been a while, and everyone hang in there, and I'll be back in 4 or 5 minutes, and we'll get rolling. Anthony, hello? We'll make you the presenter now, buddy. Anthony Allen, come on down. The price is right.
You can hear me, right?
I can hear your voice. Yeah, hi, Anthony. How are you, buddy?
Awesome. Glad to be here. It's been a while.
Yeah, it's been probably a year at least or more.
At least.
And, I've been following you on Twitter, and you've made some great calls. The first one I could think of was gold at the lows this year when it got smashed. You went into Nugget. That was a great bottom pick. Do you know how to share your screen here?
Yeah, I thought I clicked on it. Let's see, what do I got to do?
You click on it, and it'll ask you which one you want to show, and then you click on that.
Are you seeing it? You're not seeing any screen. Let's see. People see your screen. Oh, click to stop. I stopped the screen sharing. Why isn't that working? Let's, you don't see it, huh?
No. Oh, you're seeing it, Chad? How come I'm not? Let's see. So it's me that's not seeing it. All right, I got you now, buddy.
Awesome.
All right. Okay, so the texts have been on a tear, and you're showing this channel. I think that you put out a tweet that you thought today might end up being negative. Were you looking for a surprise result in the French election, or?
Oh no, I was looking for a sell the news event because I think everybody was going to win over there, and I don't see any more good news coming.
Okay.
So that would, I think maybe the market's going to hold up a few more days. I can show you another chart showing that. But this is the long-term channel going on our 9th year with tech blazing, and
that's 3 threes, Anthony.
It's
9.
well at the top of the channel, and that's where we want to sell. I've got a couple different LA wave counts. I think it's the end of
this has been the relative strength. I mean, it's really kind of a reflection of NASDAQ, isn't it?
Definitely. This is what's led, along with healthcare stocks. The whole rally, the entire rally, really, it's healthcare and tech in a bubble. And I think we're going to see money come out of tech and go into energy. Let me show you the 20-year NASDAQ. And here on the 20-year NASDAQ, you see we're touching the top of this channel. So we really don't want to be long here. Even if it throws over, which it did slightly, it's just sitting on this blue trend line, which is typical. Markets break out or
So do you think that there's a shot that we go, it looks like a broadening formation when I look at your bottom line.
right?
Do you think there's a shot that we take out last year's lows before 5 to the upside begins?
Oh, definitely. Yeah.
So, I mean, that looks like that could come in around 4,000 in
Yeah,
the
that's
NASDAQ sometime this year.
I think that's a good target, and then see what happens there. We're
Okay.
at least going to bounce off of there, I think.
Okay. So you're kind of in line on your count with some other Elliottians, and you follow Peter Goldstein at all?
No, I don't really follow.
Okay, he's a good follow, but he came in early in the year, and that's what he was looking for. He also had it labeled on the S&P too that we could go back towards that 1800 level before we head up to 29. But I like when guys I respect, and that's why I brought you on, Anthony. I respect your work. So when I have some outside experts that I bring in to edify the community saying the same thing, and I know Blake is
I love when that
selling mango away. It hasn't worked big time in a long time. Probably people are saying, why do it? I mean, people right now I'm hearing aren't even spending money for protection anymore because they say it's a waste of money.
That's a contrarian indicator. This
We're looking at.
This is the weekly. I was thinking about the VIX when you said that, but this is a weekly chart of the NASDAQ, and shows that what I think is.
Doesn't look like. Oh, okay. Go ahead. You're scrolling so we could see the whole thing.
We'll scroll over to the right here in a minute. This is wave one. This is the rally, and then this was one of three. That wave three continued for 2, 3, 4 years. And you could break down this. It's hard to break down this count, but it's wave three because of the strength.
Yeah.
Wave one, nobody believed in it. It pulled back, shook most traders out, even in wave two. And this is where I believe energy is right now, actually, in a bull market. And nobody sees this wave three coming. This wave three extends further and longer than anyone can imagine, usually. That's the best way to describe wave three. And so we saw it rally 2, 3, 4 years, and all we saw was this little pullback. Was the August crash here? Right. Bounced back. We got that pullback, which we called because there was no fear in the VIX. Everybody was scared to buy this, but the VIX said, go ahead and buy it because wave A was overdone as far as fear goes. But the VIX...
that's when the VIX went to 50.
Yeah,
that
right?
that was a wand devaluation. The Dow came in, opened up 1,000 lower that day.
Yeah.
And they couldn't even open the VIX.
After the market had traded flat all summer, all of a sudden, what caused that was insurance companies pulling out of Obamacare. If you look at the healthcare stocks, you'll see that that's where the panic was, and took the whole market down with it on low summer volume. And but at that time, that was
an August surprise.
Right. Oh yeah, August surprise. Yeah.
Maybe we have another one this August.
That's a good chance. Maybe July, August.
Yeah.
And at that time,
No, go ahead, buddy.
I was talking about newer highs, and everybody probably thought I was out of my mind after that crash. But here we are. And there's a possibility this is a continuation into wave 4, this triangle in purple. And this could be wave D. And so we can come all the way back down to 3,800, or what was it, 4,000 on the other chart.
Yeah.
Yeah.
Right. And then blow off one more time?
Yeah, then we get into wave 5, which that would be similar to the wave 1 here. That would take a year probably.
Interesting.
So,
Okay.
yeah, I don't.
So wherever we get, if and when, and I think there's a, you know, I'm concurring with you, this sell-off happens, this respite shakeout move, this is going to shake out a lot of people. It's going to feel like a crash to them.
Oh yeah, it's going to hurt. All the young people who are invested in tech. And
I mean, you're talking about 30% in NASDAQ here, if we get to that target.
oh yeah,
You know, and then a lot of people are going to be calling it the beginning of the end of
oh yeah.
bull market down there, right?
We
And
have
then it's going to be interesting down there too when this manifests. I'm wondering what will lead in. You know, you make an interesting comment that people are going to start to rotate into oil.
yeah.
Because our research says that oil may have bottomed, or maybe there's one more low left last week. And I think there's a shot for $62 oil. Still.
Definitely.
Do you?
Maybe higher. Yeah, maybe higher. And I think it bottomed Friday.
So you think the S&Ps could still fall sharply even with strength in oil?
Yeah. You know,
Okay, because that's kind of a fly in the ointment.
it could be a Middle East blow-up event. If Russia and Iran attack a U.S. ship, something like that, then you could have energy and oil skyrocket, and the rest of the market.
Okay, so it could be, yeah. So crude under pressure before Saudi Aramco goes public. So they get a little war going to drive up the price, so that IPO goes off.
Yep. It's going to help Saudi Arabia. So whether the attack, well, we've actually been watching for an attack, and things have kind of ramped up. The saber rattling in Iran, buzzing our ships. They ordered some missile they can fire on a U.S. ship with. I don't know if any of it's true, but if they can fake it, that would help Saudi Arabia, our buddies.
I'm getting a question on your CD. Can't it be a wave 5? Why is it a wave 3 instead of a 5 when we complete?
Yeah, it definitely could be wave 5.
Okay, it could be. All right. Interesting.
So depending on what the VIX does, if we see all-out panic and not just a pullback on lower volatility, then it's going to look like this is the top.
And what number in VIX would tell you that? Over 50 or
once
mid
it gets
30
over,
be enough?
once it gets over 20, and 20 is like the standard everybody knows.
Right.
We'll get to the VIX in a little while, but I wanted to show you this.
This is a Russell.
To explain, I use the VIX as an indicator of which wave we're in, because each wave acts differently. Now, if this is wave 4, it's going to look like a crash to a lot of people, but unless we see the VIX get over 20 and start popping and get up into the 50s, then we're not in the big the Armageddon trade. I'm looking for VIX 50 again and plus. So,
Okay.
if it just goes up
90?
and that's
90?
VIX 90, sure. This is financial. This is the Riffin, which FAS trades off of FAS or FAS and FAZ, the triples.
Right.
Uses this Russell 1000 Financial Services Index. You see again, we're at the top of what could be. I mean, I don't really see it breaking out of this triangle.
So if this is a wedge, yeah, pull
It's a
back to
big
the wedge line.
It's a huge wedge. It's a 9-year wedge. It scares
Well,
me.
the rule would be if it breaks down and doesn't hold that bottom trend line, it's going to 605. That's where you anchor it. You anchor it down there at 605.
Here's what I would do if the wedge breaks. Of course, that's where everyone's going to sell at this 1300 level. If that lower line breaks,
Right.
then I would make it a channel.
I see. Nice look.
And
So that's already rolling over.
and here's a little, you can see this. These 2 points here line up, and this is good lesson in charting right here too. Some of the stuff I picked up over the past, how long have I been doing this? 10 years? So if
Times
you
what?
do this,
10 years times what?
I've always watched the markets, but as far as
Oh, okay.
really like the technical analysis, it's only been
Do you watch the Cubs or the Sox? I know
Cubs, but because I didn't watch this year, that's why they won.
they're losing. Yeah.
That's
Okay.
Right, that's superstition right there. So see this. I want to show you winning, if you can see me. That's funny. This line here lines up with these 2 points on the lower candles, same as this one. And so what I do is cheat down this line and look for 1,000 at the bottom of a channel. And so if it is only wave 3, this would be 1, 2. Can you see where I'm going with this?
Yeah.
So
3.
1, 2, 3, 4, 3. And so 4 would be a long, drawn-out. Everybody will think the world's coming to an end and blame Donald Trump over the next 4 years, but it's really just a normal pullback. And so,
You bring up Trump. Don't you think he'd be better off getting a bear market out of the way in his first 2 years instead of his last 2 years? And whereas the timing not going to work out that way, that really, especially if this is only going to be a floor, then we're rallying into 2018, late 18. Right. And then the next couple of years would be pretty miserable going into his re-election campaign.
Yeah, and I'm not sure. Well, he says everything, and then whatever sticks, I think he goes with. And wave 4s take a long time, though. See, wave 2 took a little over a year and a half. It's like it was done by September, so not a lot of time. Wave 4, on the other hand, because wave 3 is so long, it needs more time to consolidate. And so wave 4s are a lot of shakeouts, and they take a long time. And by the end, everyone's like throwing their hands up in the air and getting out. And then it's time for wave 5 because it's just going to seem like a long time, and it is going to be a long time. I'm going to throw up a hypothetical triangle here.
Okay, well then, even if it's a wave 4, it ends in the middle of 18.
Took 4 years to get here, so I mean it could take just as long to consolidate.
Okay,
and it could be in a tight range. I mean, it could look like this.
Yeah.
I'm thinking it's going to 1,000. So maybe this is better. So tell you what, wave 4 is a good trade, and everyone's going to think the world's coming to the end because it's a big correction. It's the first correction in wave 4. It should look like a zigzag. Like it's probably going to bounce off what we thought is the wedge.
Yeah.
And then tumble into the end of wave A. From there, it can go all the way back up to the top of the most likely going to be a triangle correction. Yeah.
So the A of 4 can go into the end of the year.
Yeah, good.
Into the fall.
Mm-hmm. Or at least, like as soon as we can get it done is the fall.
Okay.
And then we'd rally back to wave B in the end of the year. And then wave C's are complicated. That's going to take a while. Already I can see me pushing back this wave for another year. I mean, it's going to be looked at as poor market performance. But
all it is a correction before the final blow off.
Okay.
Yeah. Here's the XLF.
I wanted to ask you something. It's kind of our bailiwick, but I remember you putting up, I don't know if it was on stockcharts.com or Twitter, you had a pretty bearish view of pound dollar.
Oh, you know what?
If you want to go on with
I remember that. Yeah,
if you want to go on with your stock charts, that's fine. But
I just want to show you this other financial. This is the XLF, which is what most traders use.
Okay.
This pullback to the lower blue line, 61.8% Fibonacci target. Well, if we could get this pullback done, I mean, maybe it holds up into the summer and then crashes in the fall. That would still be the end of wave 4, or a 4. So watch. I'm using the Fibonacci. Let's see. I want to make sure that's correct. I'm big on the watch Fibonacci targets. That's right. That's from the beginning of wave 2 to the end of wave 3, with a 61.8% golden ratio right there. So I like it. I'm going to like it down there. I don't like it up here. I don't like anything up here except energy and maybe biotech now. And you were talking about.
Yeah, I saw that your biotech chart that was 4 lining up for a 5 or something like that. Okay, so
let me see if I can find that gross or that British pound chart. You can see how many charts I've got.
Yeah.
I've got some oil charts in this folder too. I think maybe it's in the world currencies folder.
There it is.
It's the U.S. That's the U.S. British pound.
Okay.
That's not the one. I chart a lot of different views and possible outcomes, and whatever looks best and seems to fit everything else, that's what I go with. I can't seem to find it. Let me look one more time back in this one. I think I've seen a dollar breakout, and I wanted to talk about that. Possible mother of all short squeezes in the dollar. And we were looking for the dollar to consolidate into a pattern last time, and it didn't really do that. Oh, here it is. There it is. So this was the first. I think this was the first move down. Looking at a 3-year chart. I say I think because it's not a 10-year chart, but this acted like the beginning of wave 3, which wave 3s usually look like a crash, and that's what it's looking like. So we got 1, 2, 3, then we got 4, and wave 4 interferes with wave 1 here, which I don't really see as a problem. 1, because it's not a major index, so LA wave rules aren't going to apply. 2, wave 4 can interfere with wave 1. See, wave 4 price action interfered with the end of wave 1, which under LA wave rules and guidelines isn't supposed to happen. But so there's always an exception to the rule, which is in a triangle. So I don't know how let me paint this in pink so you can see it.
So now that we're over that breakout line, like 27.5, we could still move up towards 30, 32.
Could. Yeah, you could.
Even 30. Yeah.
We saw gold do that kind of.
So then let's see your dollar view then, because I think you're clearer. It might be clearer on that.
Yeah, definitely. More clear than this.
Okay.
I mean, this is still trending down. You see with this pink line.
Right.
But so often we see these false breakouts, then this pink line would become your stop hunt. So everybody gets shaken out on an overshoot, and then
it fails.
Then destroyed when it breaks.
Yeah, because there's still plenty of bears in there. It might take one more, jolt to the upside to get them to capitulate over the big round number of 130.
Mm-hmm. See, I've got that. I've got the U.S. dollar chart. Today's folder, here it is. So here we see wave 1 back in May of 2016. And then we see 1, 2, and I believe this is 3, judging by the strength of it.
Yeah.
And now we've been watching this pullback into a declining wedge,
Yeah.
or triangle into what is most likely wave 4 because it's a triangle.
Okay.
You know,
Interesting. You have that 90. Why did you come up with that green line at 97.5?
Because that would theoretically be the end of wave 1 of 3.
Okay, because Nikola Duke has a harmonic that ends right around 97.70, I believe. So there's some confluence there.
So I'm watching that because theoretically wave 4 shouldn't interfere with that.
Right.
And well, it also lines up. I don't know how long this is going to hold down here. Like I said before, these wave 4 triangles, and this is a good example of one, take forever. Everybody got excited here. It was a 9-month rally, and now we continue into wave 4. So
the way this is setting up, what we're going to have is kind of a deflationary move with the stock market going down and the dollar skyrocketing into a wave 3 target. Where is that? Up around 110 or 112?
It could be as high as the top of this wedge.
That's above all the prices. I have no idea.
That's like
112.
Like freak out. Yeah, we're gonna freak out.
I'm guessing 112.
Yeah, somewhere up there. I probably got a longer term chart.
Okay.
But when they see it, I mean.
So now
break out here and then come back, retest the top of the triangle, will become a support.
Yeah.
See, this is a daily chart. So let's say that takes until July, almost July. Traders are back from summer vacation.
Markets are dead.
You're right. Nobody's expecting anything. And then the dollar breaks out to new highs.
Yeah. And the market sells off and equities sell off.
Yeah.
Okay.
I don't trade currencies, but I watch everything because, I mean, this is a story being told here that fits the other story, which would be deflation, gold sells off, dollar rallies. Oil, on the other hand, doesn't always trade in lockstep step with the dollar.
Well, you know what? I've always had the argument that weak oil prices do not support the dollar, because if it's a petrocurrency and there's less demand for oil, there's less demand for the petrocurrency. And higher energy prices often can be supportive of the dollar because of its petrocurrency status.
Uh-huh.
You ever think of that?
No, I haven't.
All right, well,
you can see where I wrote right shoulder here, too. So everybody got short. Here's the left shoulder. Here's the neckline. Here's the right shoulder. They sold. They're all expecting this is U.S. dollar to break down.
Right.
And what it does, it breaks back above the neckline.
And all the dollar bears are out now.
Oh, exactly. The bears are all shorting the U.S. dollar.
Yeah, 120 euro. A lot of people are talking 120 euro. So interesting. It's really
one more thing on that. If I can find the chart, super long term, it's 20-year. No, it's the one we were looking at. It's the long-term dollar. Well, what I wanted to show you is that the rally on the dollar reached a key Fibonacci retracement. See, this is what I was thinking last year. So we're going to trade into this triangle in wave 3, a broadening triangle.
Yeah. You do a lot with broadening. You do a lot with broadening formations.
I watch a lot of triangles, period, and especially broadening triangles, because that's what I'm expecting the top to look like. this chart. See, this chart was wrong. I'm bullish now. You get to see all my mistakes. Let's see. Here it is. So we saw this big crash on the dollar when the Fed, we had the tech crash.
Right.
And what did the Fed do? They destroyed the dollar.
Right.
And all that money went into bogus real estate deals, and then that crashed, and then we saw deflation. So you're right on with the deflation. But it rallied right to this golden mean. That's a Fibonacci target going all the way back from the crash to the bottom of the housing market. Now it's rebounded all the way to what it hit it like perfectly. So what we would see is a Fibonacci breakout, which would be super bullish because it would mean the Fibonacci ratio was wrong or didn't work, and also the bearish head and shoulders didn't work, and so you're looking at lots of short covering, and that could go on for some time.
So 120, the old high, the 01 high.
Yeah. Right. Let's see if we can find the target on that.
That sounds like you, Ronan.
So let's see. There's AB, and then let's say, because this ain't working, or the dollar would be crashing here. This isn't the end of consolidation, so I don't mind destroying the chart. But it's a pretty cool chart because it shows shows why it was sold here. Maybe the machine sold it at that Fibonacci number.
Right.
So I'm not sure if this was AB here or, but anyways, the dollar bottomed here, and no matter what the Fed does, they can't get the dollar to weaken. And they pretty much gave up after QE. And so I would just draw a simple channel. This is a monthly chart.
Yeah, that's some.
I mean, if you told someone the dollar is going to
Mount Everest. It's the Mount Everest trade.
it's frightening. Yeah.
All right.
And how to find?
I'm gonna go buy an oxygen mask for that.
I'm going to build a bomb shelter.
Yeah.
They're trying to sell
In
us
Chicago, you should have one already living in the burbs of Chicago.
Yeah. I remember my dad talking about building one during the Cuban Missile Crisis. When I was just a kid, but he was onto something there. I wish he would have built it. I could trade out of it. So, there's resistance, 1, 2, 3, 4, but I mean, this really could continue. I'm hesitant to call a top. I mean, if it's still trending up.
Right. Interesting.
Down, and it maybe
looks like that pink line is going to be it too. Yeah.
Maybe it continues to consolidate on
demarcation line, 97.5. So
97. Yeah, exactly. So it's good. I get to update the chart too. So yeah, maybe we pull back this pink line, and then again July, bad things could happen. I don't think. I think we're going to see tech roll over though pretty quickly though, and the rest of the market, and oil and energy rally. Of course, this would be wave 1 of 3, and is it possible they're going to start trading oil in something other than dollars? Because that would cause the dollar to rise, cause oil to rise.
Well, the guy you voted for is going to visit Saudi Arabia.
Yeah, he's going to visit. He's going to go visit the Pope too, which disturbs me.
Yeah, and
we owe the Vatican a lot of money.
And there are guys like Rickards and some of these people who have been talking about the possibility of the Saudis unpegging the real from the dollar. That would do it.
Huh.
So
Another thing that's going on is South Africa.
and we all know there are many places in the world that would love to knock off the dollar. They're already doing swap payments for oil in other currencies.
Right. If Russia wants to hurt us, then they can do that with Iran and maybe get some other countries involved. But you know what happened to Gaddafi? You saw what happened to Gaddafi when he tried to trade gold.
Hegemony. Hegemony. Yeah.
So here's oil since 2016. This is energy. And what we've seen is this pullback, and it's what it looks like. It looks like an ABC, and it took out a key Fibonacci target on Friday and bounced out of the hole.
Yeah.
This 150. This is the S&P energy.
Okay, interesting.
So we saw a little wave.
Great interview, Anthony.
Thanks. I'm glad to do it. Glad to share.
And you have any? I know you have your Twitter and you have a private Twitter feed, right?
No, I had the private Twitter feed, but I got rid of that. So I'm just
okay. So what's the best way for people here that watched you and want to continue to follow your work or subscribe to what you do to get a hold of you?
Follow my Twitter at 3X Traders.
Okay.
I want to show. Oh, you were done?
Do you want to show something else?
Yeah, I want to show you the. See, I'm in energy. Oh wait.
The VIX?
Oh yeah. You want to see the VIX?
Yeah.
I'm gonna find the Dale interview chart here. Here's actually WTI.
Oh, all right, that's my target, 62. And you know why it was my target? Because that was the top of the falling wedge before it broke out, 62. So you have 62 in crude too. All right, interesting.
Could fall short unless this is wave 2. Because it looks like an ABB pullback and then 1-2. Not sure about that. And let me, where are we at? Here's the one. Oh, that one's not. It's a blank chart. We're going to look at the VIX. And I believe it's my last. I get so many VIX charts in here. I don't think any of them are here where they're supposed to be. Let's see. Let me show you the short.
These are 10-year lows here.
Here's
historic lows, right?
Here's my busy short-term VIX chart. It's a mess, but it's working. And we saw the VIX go higher than I thought it would, and I was wrong. I'm like, it's not breaking out here, and it did.
I remember that.
But I stayed bearish, and it really broke out. That's what the holy cow is about here on this. It broke this channel, which this red line represents the lower channel, and this blue line.
Yeah.
It was just smashed. I think there were a lot of people short the VIX or long the VIX here, and they were just destroyed. And now we've seen it just hanging out down here, not at new lows this morning. So I'm thinking gap fill. Thought it might happen as soon as today, but it's taken its time. And so that gap fill will take place about 1350 if it happens in a hurry.
And then that's it? Then it goes down again?
Then it's going down, probably to this blue line.
That's like 9.
Let me show you my long-term VIX chart. I mean, it's scary to be long anything here because the VIX has been consolidating for a long time. I wish I could move the chart so you don't have to see all this. And this represents volatility in April for 4 years. Now we're seeing it in June. So, and now we see the VIX consolidate down into this purple triangle, which really that could be the only 2 lines you need on the chart. Go to, what is that, 3-year view?
Yeah.
So you're looking for a low in the VIX around June, July.
Yeah, again, yeah, July.
Yeah. July, so the dollar low.
Maybe
VIX
they take
low.
all summer taking
Maybe
profits.
the stock market high takes that long. Could the stock market high take that long?
I don't think so. I think we're, oh, you know what? That's a good question. You know, and the charts need constant updating, and you have to watch them every day and update them every day, or it'll get away from you.
Right.
You can see this wedge.
Yeah. It is diverging.
Could even fall like to $8 or $9 on some kind of news, and then what does it look like here? This bottom purple line in middle of July. But I think
Yeah,
once
looks like it could be
once this
8.
finishes, and here's where I saw the top on the VIX last time, this pink line. So
Yeah.
once we get up over 1750, I think we're going to be off to the races, and the market's going to be tanking then. And as long as it stays above that 1750 level, looking
That'll
ahead,
tell you wave 4 is underway at least. Okay.
I'll tell you that we're in a major sell-off. As long once it breaks out there and stays above 1750, and I would say 1750 becomes support. Top of this triangle also becomes support. And once you're above 20, or even 1750 in this, according to this red line, then we're going to be headed towards 55 probably.
Okay.
56 on the VIX.
Okay.
Hard to imagine.
And then if we break out, it measures 95. But Anthony, great interview. A lot of very good looks in equities and the dollar and oil. So
I was happy prepared this time, and thanks to you for encouraging me, because actually, and you've helped me out with some upturn trend lines, looking for stop hunts and stuff, and my chart has improved exponentially over the past year or two because of it.
Oh well, great, Anthony.
I could show you the short-term market before we go. Where's the candlestick folder? We called the top, there it is. The chart's working. I love it when the arrow works. So when it doesn't work, I get upset.
Yes.
I get upset. So this is either a broadening wave 4, and so if that's what it is, like you said, then we could rally into the end of the summer. And we're kind of looking for a shakeout before the breakout, before the bears head on vacation and cover their shorts down here. So, and the S&P looks about the same. We're also watching the, this is the 50-day. So we've been trading in this little range here. It's driving me kind of crazy, and I expect us to hold up in that range. I thought I had a view that was showing it holding up a little longer. This one, this is the S&P.
Okay.
So it could be wave B, and it could just hold up this little range here between 2376 or 72 has been like the.
So again, a regular ABC.
And yeah, kind of whipsawing into a wave B, and then a correction in a powerful wave C before the summer if they dump before Memorial Day. But no one wants to get short here. Not really sure. I suppose that's where the bulls want to dump, is where the bears don't want to get short. I think it's all about, we don't want the bears to make any money, so we're going to wait until just before Memorial Day to take profits, and then squeeze them into the summer on light volume. I look a lot at holidays and calendar dates to determine what's going to happen next. But I'm very nervous about the market here, and I'd say sell tech, buy energy. I think we saw the bottom on oil. I think that's the only chart I didn't show. The WTI.
I think you did. Yeah, I think you did. That's how I came up with 62.
Oh, yeah. Oh, I tweeted it up this morning, the short-term LA wave count on the WTI. So you can check that out at 3xtraders.com, and I'll see you all on Twitter.
Okay, everyone, thank Anthony Allen at 3X Traders. May pips rain down on you this spring and summer, the rest of the year, my trading warrior brother. Thank you very much.
All right, thanks a lot. Talk to you later.
We'll do it again, buddy.
Yeah, thanks. Bye.
All right, see you later.
All right.
Base members, see you guys tomorrow for Turnaround Tuesday. Thanks for your attention. Blake, thanks for your analysis today. Steve, Stelios, Velu, everyone have a great day. Tomorrow I have Chris Bear, Brazil, is going to be with us. Till then, don't just count your pips, count your blessings. I'll see you tomorrow.